So last week I made a video titled Kid Loses It All Shorting Nvidia Stock, and if you didn't watch that video, essentially it was about this teenage day trader on X.com who was shorting Nvidia stock before the earnings, claiming that Nvidia stock was a bubble. And I made a video on how it was very likely that this kid was going to get wrecked and obliterated, and in fact he did, as we ended up seeing Nvidia pretty much from the time he was shorting it to the peak do over 22%. And I explained how, this comparison of Nvidia being a bubble akin to what we saw back in the 2000s with the dot-com bubble is not really a great comparison. And we'll go ahead and delve into that further in this video. But I wanted to make another video because this same teenage day trader has once again made another bold claim and is striking again. In fact, he recently made this new tweet stating that he is getting his revenge on Nvidia and how he is full porting Nvidia puts on the open and how we are going to watch him make 200,000. Now, first off, right off the bat, you should never be revenge trading. That's just a recipe for disaster, but it's likely that he is going to be getting obliterated once again. Now, I went ahead and blurred out his name and his profile photo, which, by the way, he doesn't even have a real name or a profile photo, but I wanted to kind of bring awareness that you should always raise an eyebrow, especially when you see individuals flaunting Lamborghinis and saying that they are a teenage day trader rejected from Harvard. That should automatically be a huge red flag, but apparently it's not, as he has a huge following of over 77,000 followers, buying into his services, thinking that they are going to become rich overnight traders, when essentially what they're doing is just becoming degenerate gamblers. Now, the reason I believe that he's likely to get wrecked once again is that although we had a minor pullback for Nvidia just a day prior, which, by the way, makes sense being that the stock has ran up a significant amount, and also because of the recent news, which I've kind of delved in a bit deeper for those within the Push and Profit private group where I share my daily briefings. But we talked about within the daily briefing last night on how we were getting the personal consumer expenditure report this morning and how it was likely to come in much cooler, which was going to be a good sign that the trend of inflation is coming downwards, which, by the way, a lot of people get inflation mixed up. Inflation is much higher than it was from the previous years. And so when we say inflation is coming down, it doesn't mean it's going down to what it was before. We're just saying the trend of inflation. And that's exactly what we ended up seeing. In fact, last night within the private briefing, I shared, and again, this was at 1:01 a.m., right? I kind of typed the briefing late night. I usually do them in video format, but it was just a late night, and so I went ahead and typed it up. And I shared how we were likely to see the consumer expenditure report come in much softer. In fact, we actually started seeing it have revisions for the expectations, right? It originally was showing at 3%, and then it was revised down to 2% month over month. And I shared how my forecast is that I believe the PCE figures are likely to come around 2.4%. And that is precisely what we ended up getting. In fact, we could see here at 9:07 a.m., I updated those in the main chat within the Push and Profit private group, saying that for anyone that missed it, the PCE index rose 0.25% in April. It was rounded down to 2% because it was actually 2.49%. In line with what we expected of the PCE report not coming at that 3%. Or that 0.3%, and that this was likely to bode well for the markets. In fact, I shared this piece over here on how Bloomberg had how many market pundits were unexpectedly surprised by the PCE report coming downwards. And I've shared within the Push and Profit private group that a lot of these market pundits as well are not really worth their salt, as they oftentimes are not really looking at the higher frequency data that we are looking into, right? And so as I said, I shared in the main chat, most experts are terrible. Headline here with Bloomberg surprised at an unexpected drop, when this was something I projected within the beginning of the week for those within the Push and Profit private group. And so for those wondering, well, what does this have to do with Nvidia? Well, we are seeing Nvidia push upwards even after this red day, because overall the markets are pushing upwards and having a strong day finally after this report. Because of course, the idea that the inflationary trend is softening means that we're likely getting closer to cuts taking place. But going into the conversation with Nvidia. Now, yesterday, of course, we had this bit of a pullback with Nvidia. We had some regulations or kind of the US government intervene stating that there may be restrictive of chips going into the Middle East. And I'm not going to go ahead and delve into that and how that impacts Nvidia. But of course, that was something that caused a bit of a ride down for Nvidia. But ultimately, this was not anything meaningful when from the highs to the bottom of it fell down about 4%. But 4% is really not meaningful when the stock has just ran up over 100% year to date, which is something that we called out within the Push and Profit Private Group as a breakout idea back in December. And for those that are part of the Push and Profit Private Group, they could go ahead and speak and let you know that we were on this way earlier than a lot of individuals. Now, in regards to the conversation of Nvidia being similar to what we saw during the dot-com bubble is not really a great argument, especially because one of the things that we're seeing is that Nvidia's revenue is taking off, right? And so we are seeing obviously high PE ratios for Nvidia, but that's because, you could justify the high multiples when the earnings are there. What a lot of people don't remember is that during the dot-com bubble, a lot of stocks went into the moon based off little earnings. There were companies that just said that they sold jeans, and just because they were going to sell them online, just because using the buzzwords of World Wide Web back then and online and internet, companies rose, right? It was akin to, just companies saying AI back in 2020 when there wasn't really any profits really being driven from AI back in 2020. But now we're starting to see Nvidia actually reap the benefits of its profits from AI. And of course, when you have the fundamentals align, well, that's why we're seeing Nvidia go upwards. Market participants put money into a company believing that it's likely that they're going to get a return on their money when they justify the earnings that the company is doing. Of course, there's several reasons why stock can go up, right? It's really just about capital going in and capital going out. But you could justify Nvidia being, yes, it is high, but the earnings are also high. It's not like it's something out of thin air. Now, this teenage day trader, he shared how, he's going to short this as this is a company that's going to be going to zero. And that's another red flag. Anytime you hear someone say a company is going to zero, it's very unlikely that that's going to take place. And the reason I share this is because earlier, back in, I believe it was 2021, I did a lot of coverage on this company called SPCE. This was a stock that during the pandemic went to the moon, absolutely went bonkers, right? At one point, it did over 700% during the pandemic, but this was a company that wasn't fundamentally sound. It honestly had no real earnings, and I shared how, from a technical perspective, this was a double top pattern, but from a fundamental perspective, this was a company that was likely to just fall down to the abyss, not to zero, but eventually just fall down to the abyss, and that this was something that was going to be a great short. And it was one of our best shorts that we had back in 2021. And it ended up going from a stock that was valued at around $60 all the way to a penny stock at around 70 cents. And the reason why I say you should be skeptical of anyone saying that the company is going to go to zero is that this is still 3 years later of a company that's not fundamentally sound. And yes, it's trading at 0.70 cents, but it's still not at zero. And so for someone to claim that Nvidia is going to be going to zero when in fact it's just, continuing to make new all-time highs and just blowing us out of the water in regards to the earnings, that's a huge red flag. And this kid who is revenge trading is likely to learn another lesson. Now, again, this video is not to go ahead and attack the teenage trader. I'm just, first of all, just stating that you should never listen to anyone who is an anonymous multi-millionaire day trader who bought Lamborghinis. That's something that should already raise a red flag. But the reality is everyone makes mistakes. Everyone should be able to learn from their mistakes. And hopefully in this video, you guys can learn from someone else's mistake, because it's always better to learn from someone else's mistake. And with that said, hopefully you guys found some value in today's video. Make sure to subscribe if you haven't done so already. It's likely not going to be a video that's going to perform well for the YouTube algorithm, but if you enjoyed the content, make sure to subscribe. And also make sure to watch this next video right over here. And I'll see you guys on that next video. Take care, guys.